Welcome to the session on equalizing access to capital. And today we have three very seasoned, experienced, and panelists who have invested, advised, and they also have quite a good knowledge about Bangladesh because that's where they have invested and advised. So without taking any further time, I'm going to straight go to the panelists on this exciting discussion on equalizing access to capital, and which is so important for a country like Bangladesh, where we're seeing tremendous opportunity, and we need as much capital as possible. So, if I may introduce the panelist, we have Andy Darvishi. Andy is from IFC. He heads the fintech business of IFC. We have Goming Chang. Goming is from Ant Group. Heads Ant's international expansion and also their A+ business. And we have Vash Maheshwari. Vash is from China International Capital Corporation, which is an advising, their investment bank provides advice to companies and as well as investors, I believe. So without going any further, three of you, if you could give a very brief introduction about yourself, what your organization do, and the role you play in the organization. Thank you. So, Andy, if you start with, please.
Thanks, Kamal, and thanks for having us here. I am a venture capitalist with International Finance Corporation. International Finance Corporation, for those who do not know, is basically a large development institution whose main product is financing. It is one of the world's largest investment house, with its main target, its main focus and mandate is development. So we do invest for the returns. But we also have keep an eye for development, keep an eye for social development, basically, in general.
Goming.
Yeah, here's Goming. I'm the general manager of Alipay Plus partnership in the global market. Everybody know Ant, and Alipay Plus is a new brand and Ant Group. And Ant Group, everybody knows, is a leading fintech company in the global market, starting from China, but now we're moving to the international market.
Thank you. Vash, you please.
Sure. So I'm Vashisht Maheshwari, work with China International Capital Corporation. We are pretty much a premier investment bank in mainland China with offices overseas. I sit in the Singapore office of CICC. And I am basically an executive director and head of M&A, looking after the China Southeast Asia and China South Asia corridor. We generally help tech companies in the context of private capital raises, as well as IPOs, listing on Hong Kong and US markets. Our recent most transaction was actually in Bangladesh, where we were advising ShopUp on their Series B capital raise. So we've got a good amount of understanding through that transaction about Bangladesh.
Thank you. And then, I'll straight go to the questions, and again, we'll start with the same order. So, Andy, I know you have been investing all over the world, and IFC, as you introduced, has and its eyes on the development, as well as it's fundamentally an investment organization looking for return of the investment. So my general question is, and take your time explaining this thing, that what do you look in companies when you invest in emerging countries, particularly your space, fintech and e-wallet, and also you can also extend it to technology companies.
Thanks, Kamal. I guess it depends on who you ask in IFC. They could give you a very different definition of what is development. From my perspective, and I think it's shared very commonly with the rest of IFC, is we look for extraordinary returns. And when I say when we look for extraordinary returns, my general, the way I approach it is I say, if you don't steal that money, if you don't rob people of that money, then you probably have been successful in giving them something they want to do. So if you get extraordinary returns, then you must have changed their lives. You must have given them an alternative they didn't have. Otherwise, they wouldn't have paid you. So when we invested in Bcash, we were looking for that extraordinary return. And thanks to you and the management team of Bcash, you have given it to us. Bcash provided to the Bangladeshis a choice, an option that they didn't have before. And therefore, it gained market share in the financial services industry that would otherwise not have gained it. So again, I like to simplify it that we are looking for organizations that are extraordinary, that are well managed, well governed, that are owned by the right individuals and the right parties, that develop the markets the right way, and therefore in the process give us extraordinary returns. We take that approach, my group takes that approach everywhere. So we are looking for extraordinary returns anywhere from Argentina all the way to Vietnam. We have invested widely in companies that we call fintech companies that are widely known in the world now as fintech companies. They are disruptors. They are companies that change the way financial services is designed, thought, built, and delivered. And therefore, if they are successful in disrupting, then they should be successful in giving us that extraordinary return. And if you want to put it in development speak, then they would be successful in actually developing the markets that they sit on. That would be my one way of defining it in a way that it actually converts very well for in the language of all investors worldwide.
So Andy, I mean, listen, I'm going to go a little, let me put it this way. You are the fintech head of IFC, so you have certain lens and certain attitude. But when we look at IFC or when we go through IFC's, yearly annual report, we often see pictures of fertilizer factory, power plants, okay, large infrastructure projects, okay. Fintech is very different from that. So is it IFC is changing, or you are an outlier inside IFC, or is this it's a new world that people are embracing?
It's a bit of all. It's very difficult to take pictures of your operations, for example. So it doesn't convey very well with pictures the same way a farm would convey that where you change a farm, it's right there in colors. The best pictures we've gotten is people with a phone trying to do something, but they could be texting or WhatsApping and we cannot tell, right? So from that perspective, it's a more elusive concept. But if you really want to dig into the heart of development, people who develop markets are not the ones that join in the end, are those that anticipate in the beginning, right? Eventually, Bcash will be a company that can borrow in the markets, that can issue bonds, etc. Those are not the companies that developed you. The companies or the investors that develop you are the investors that joined you in the very beginning when you were alone. And then as your journey, as your company gets bigger, yes, the investors that join later could write bigger checks, could write different instruments, could help you in different ways. There is no doubt that everybody will help their own way. But you will have more and more people that will accompany you on the road, down the road. So my view is, and again, it's like every large institution. When it gets very large, then you get a lot of people doing a lot of things. But if you really want to go to the heart of what an IFC should do, is to exactly go there where nobody else is, anticipate everybody else, and timely exit when everybody else joins.
So I think if one takeaway I take from your answer is that audience should get this message that IFC is not just for the conventional, the large telephone operation or large fertilizer factories. It can also fund nimble companies and early stage companies, and then help them grow. I think that's one takeaway from the.
Absolutely, yes. Thank you. And we also enjoy it. Come on, we enjoy building companies rather than joining a company that is already large. It establishes a very different kind of relationship between us and the company.
Right. So I'll come back to you. So Goming, you're
Yes.
from Ant Group, an operating company, and when you invest, how do you bring your operating learnings to these wallets or technology companies across the world? I mean, how do you, I think people, I mean, if I were an entrepreneur, I would look at Ant Group and say, okay, not only they can invest, but they can also help me identify processes or identify what's the best technology. So how do you transfer that? How do you, I mean, how does it really work?
Yeah, exactly, Kamel. All the JV partners we work together, they are looking for something beyond money. They're looking for something beyond the financial resources. Actually, besides the dollar money, Ant Group provides a lot of our practice and our learnings from different markets and share that with our JV partner. That including the technology, that including the marketing and the promotion experience, and most importantly, it's the roadmap for a mobile wallet, how to grow in different market. Take Bangladesh as an example. I'm not a local guy. I may not have a clear understanding of what exactly the demand and the needs in the local market, but I think it will be very helpful for our JV partners, say Bcash in Bangladesh, if I can share with Bcash our best practice from China, from Malaysia, from Philippines, from Thailand, from India. I think there will be a very good learning curve and also a lot of cost saving, because by doing that, the JV partner can make minimum mistake and to achieve their growth. Just give a few more examples. We provide our the wallet technology, which is a product from our China market, but in our joint ventures, say Paytm in India, TNGD in Malaysia, Gcash in Philippines, TNGD, and also Dana in Indonesia. They all adopt this wallet technology as their main platform, their core system for the wallet business. And beyond that, and take an example, say mini program, Equalizing, that all from the in-house team, which was originally developed for Alipay China users, but with which has been expanded to our JV partner and even open market. And operation size, when we look into Alipay China, it has been growing for more than 10 years, maybe. I think if my calculation is right, it is about 15 years and more. So all the things we learned, all the mistakes we made in China and also in the other markets, they are valuable. So I think we are very open to share those with partners and bring those additional value to them. That is, I think, exactly is the value, and that is our partners are looking for. Coming up.
No, that's really helpful. I mean, particularly if you look at the economic changes that China went through in the last 15 years, many of the emerging countries are going through that today. So, I mean, the way you would be able to share your stories and your learnings that a payment company from developed country may not be able to have in common. So I think that makes perfect sense. So I'm going to come back to you now, Vash. Let me go back and let me ask you this thing. First of all, congratulations for making, attracting such a good investment for ShopUp, which is an exciting company in Bangladesh.
Thank you.
Can you for our audience help us go through, like, what does a financial advisor like you, what role do you really play? I mean, if somebody is running a small business today and is thinking that I need investors and having difficulty, even understanding and even articulating in their own mind what is required, how do you come in and how do you help those companies?
Sure. So I think it really depends, right? I mean, on at what stage that particular company is, but assuming it's an early stage startup and They've probably raised some angel funding already. They're looking at raising an institutional round at this point. We generally come in with the lens of when the founders are sort of ideating on what source of financing is the most ideal for them, thinking about whether to go in for a largish equity round, whether to go in for a convertible round, depending on what the valuation expectation they have, or whether they don't have that valuation expectation, right? So from our perspective, our biggest value add is being a sort of a soundboard for the founders and giving them advice on what are the correct options for them to choose. Having done these transactions in different parts of the world, we have a collective pool of wisdom to tap into internally at CICC, and hence we're able to add value through that process. Typical process, as you would know, is starting from preparation phase, where we get attached on the storyboarding for the company, prepare all sorts of materials, which is including a teaser, information memo, putting together a financial model that includes a very important feature about market sizing. While doing the ShopUp transaction, we realized that was the number one question most investors had about Bangladesh, because the global investor ecosystem was still sort of waking up to the early stage startup ecosystem in Bangladesh. So for them to understand what was the potential, market sizing was a very important analysis to be done. So we helped ShopUp with that and sort of put together the materials. From there on, it's really about finding the lead investors for that particular round. I think the biggest hurdle or biggest sort of achievement, if you may call it, during a fundraise process for an early stage startup is to identify at least a couple of lead investors. And then you can start, approaching follower investors for subsequent sort of filling up the books. We help with that. We help with the investor access ecosystem. The third part is obviously structuring the transaction. As I alluded to before about whether it is going to be a convertible round, whether it is a preference share round, etc. What kind of valuation benchmarking should the founder have? We help them with the analysis on that front. And then sort of, you get the non-binding term sheets, identifying which investor to shortlist basis the non-binding term sheets. You go into confirmatory diligence phase where, again, as an investment bank, we help put up the data room for the company, help them prepare for all the tax, legal, compliance, diligence requirement, and eventually, sort of helping them with the transaction documentation as well. On the transaction docs, generally, it's the legal counsel that takes the lead, but as an investment bank, you're sort of helping the founder understand the commercial, underlying logic for a lot of those legalese terms. So I would say when we come in, it's pretty much, the entire spectrum of services that we get attached to as a financial advisor. And also, it really depends. If a company is already very well, equipped, they've already had materials in place. For example, in ShopUp's case, I think the founders themselves knew the business opportunity so well that we didn't need to really spend a lot of time on storyboarding. They already had a very clear idea on that. So we helped them actually just polish it a bit more. So I think those are some of the value adds we provide to the early stage ecosystem.
Thank you. I'm going to come back to this issue later. Andy, I come back to you again. So IFC is known for its, it promotes strict governance, and we all know how important that is. Now, how do you balance the corporate governance and the essential nimbleness an early stage company requires?
The best answer I can give, Kamal, is that a company that should stay nimble and is not nimble is not well governed. So I would rather define it that way. Now, of course, there's a lot of people in the governance world that have very clear recipes of what governance is. That they tell you that you have to have a board of 5 people, and one of them has to be a woman, and 2 of them have to be independent, and all that stuff. I don't believe in much of that. I believe that it's like asking what is a well-governed or a well-functioning family. Is it one with a strict dad? Is it one with a working mom? Is it one with where both parents are working, where both of them get involved in the homework of the children? Or is it something where actually nobody pays attention to the homework, but they all enjoy and live together happily? So It depends. It's a very difficult concept. So the more strict people get about what proper governance is, the more they miss the point. So from my perspective, a well-governed company is a company that the interests of shareholders and the interests of the management teams are aligned with a clear focus of delivering and executing very well in a market where the company has to execute. So if that very well means that the company has to make a decision within 5 hours rather than alert the board for 14 days in advance, well, so be it, right? So that is my personal view, that governance is a very fungible concept. It's a very large word, so people take it very seriously in a way. But if you really break it down, the essence of governance is to make sure that you have a successful company. And a successful company means a company that does not run foul with its own ecosystem. A successful company is also a moral company, an ethical company. And more importantly, it's a company that actually does deliver what it was supposed to do and becomes a successful company.
No, I think you put it very well. I mean, I think many of the audience, I believe, would find, I mean, the way you articulated will feel assured that when a very structured investor comes into the picture, and that doesn't choke them, rather it actually helps them guide, and it helps them see the longer picture and the longer term picture and the picture that eventually, you know, I mean, everybody who are working on something and passionately spending hours after hours often lose sight of those elements that you and Vash were particularly pointing it out, that it's really, I mean, I think it's very, very helpful what you just told. I mean, if this program is recorded and if the audience has the opportunity of rewinding and listening to this thing, I would emphasize them to listen to this two-part that Vash and Andy was mentioning. So Goming, I go back to you. You have invested in technology companies, as I was mentioning earlier, across the world. It's a bit different from my previous question. This is, what are the characteristics in the assets that you are investing? What are the characteristics you're looking for? Previous question was, what are the learnings you're taking? And this is like, whom do you invest? I mean, how do you select?
Yeah, I think the to select a partner, I think is super important, because when you're looking to the market, it's a lot of players. But I think a few things I'm looking at. One is of course, I must say, focusing on the digital payment industry, right? It is a specific industry. I'm looking at the existing market position and the partner's strengths and the weakness point. I think that's the first thing, because that means their present position in the market represents what they have been doing in the past, and that's the ability of the management. I think that's one key thing. The second thing is the management and the founder itself, because no matter what happened before, the market can change rapidly in a few months, in 1 year, especially when the mobile payment is highly regulated by the central bank, the government, and there are always been new players stepping into the market. So the founder, the management, they should have the passion, and they should have the flexibility, and they should have the super decent observation from the market, so they can react very quickly. There's no way we can have a business plan and represent to put everything together, say that is a roadmap for the future 2-3 years, 4-5 years. Yes, if we can have such a plan, it is good, right? It is good. At least we know the logic behind the business. But what is more important is there's always change, the moving part, the dynamics. So the founder need to lead the management to change accordingly and to keep their position and even to move forward and compete with the other players. I think that is also the important thing, because without that, no matter what existing position, how strong it is, in a lot of countries, the mobile payment is at early stage. Even you are a leader right now, you may not be a leader in the coming few years. So I think that is the second thing I'm looking for. The third thing is the resources, because in order to keep the fast pace in growth, the company need to be driven by tech team, a product team, and the sophisticated commercial team in the front line to bring back their sales from the market. And end of the day, what we learn from China and other markets, the tech and the product is the key thing. It's a core value, because a lot of features, functions, your competitors can learn from you quickly in a few months. But the core capability of your system, the core value of your product is something they cannot take away. So the tech and the product team need to work together with the commercial team to build up a roadmap for their growth. I think that is super important. But not, I have seen a lot of players, they have a platform, but they don't have a middle to long-term plan for this infrastructure. And they just add in piece by piece, this feature, that model, and blah, blah. So after 3-4 years, their system is too complicated and too heavy. And that will slow them down significantly. So the internal resources, the tech resources, is super important to support the long-term growth. Mm-hmm. So I think if I want to name the top three, I think that is the top three.
No, that's thank you. I think anyone who's trying to attract your type of investor in Bangladesh, this is very good guidance for them. Vash, I have a quick question for you, but before that, let me put it this way: that we all recognize the opportunity Bangladesh offers. It's a small country, so it has the network dividend. Like within a small place, you have a lot of people, and the income in the country is growing, and so we know the positive sides that usually comes to investors' mind. What was the most critical thing that the very recent investment you helped making? What was the selling point you used for Bangladesh, or the company you're advising?
Yeah,
I think sorry, go ahead, Gomeng.
No. Sorry, your turn.
Sure. So I think if I just look back on, there were a lot of positives. Obviously, when we did the fundraise, the round was sort of an oversubscribed round. If I were to pin it down to one or two factors, I would say this, to the point that I was making earlier, which was about sizing. Not many people realized how big a market this is. So ShopUp, I don't know, I'm sure you are aware about what ShopUp does, but it essentially is a full stack B2B commerce platform which connects, the regular Kirana stores or the retailers in Bangladesh with respect to, they help them with the Alibaba Iron Triangle philosophy, which is sourcing, logistics, as well as financing. So I think if you touch upon each of these three triangles, the market size within each of them was actually quite compelling. And not many people appreciated that before they actually saw the materials. So I think in my mind, that was definitely one of the critical factors, because I think when you look at very large and sophisticated investors, they're always looking at investing in a company that has scale feature attached to it going forward, right? So even though you're sort of still doing a very limited market share of the entire pie, but if you have the execution capability to actually harness sort of even 50% of that, it makes for a very compelling investment. I think that was definitely one feature. The second feature was around the conviction a lot of these investors had around the founders. You'll be quite surprised to know, Valar Ventures, which was the lead investor for this round, we sent them the teaser. They had 2 founder calls, and within 2 weeks we had a term sheet from them. And then that made us think, what was it that actually worked? And I honestly felt it was the interaction they had with the founder team. So once they have that sort of a conviction, then things become easier. So I think those two things really matter. Of course, there are a lot of other things which also tilted in their favor. For example, unit economics. That is one of the things which investors like Andy and even Goming are very focused on. Which again, I think it goes back to the fact that if you have a sizable opportunity, if you can be profitable, if not today, but you have a path to profitability, you can convince the investors about that. And at the same time, the founders are very trustworthy, or founders actually can present the business very well. I think those are the factors that really worked well for Shopper.
Right. Well, I mean, I personally know Afif, and I'm not surprised at all the impact he had on the investor. We are at the end, and I'm going to ask the same question to all three of you. And then I request first Andy to go, and then Goming, and then finally Vash. First Goming, you to go, and then Vash, maybe perhaps you, and then finally Andy. So, all of you have invested in Bangladesh. If you, what would be your message for the investors, for the companies? My apologies, for the companies who are trying to attract someone like you or Vash, someone like you to seek your advice. What do you want the investors to do today so they can get your attention and get your support? So Goming, you first, and then Vash, and then probably Andy.
Yeah, come on. So may I repeat your question? You say the advice to the Bangladesh.
Yeah. So what should the company do? What is the next? You have invested in Bangladesh. So I'm saying if there's another Bangladeshi company would like to have someone like you as an investor, what should be their attributes? What should be their character? What should they do to attract you?
Yeah. Well, I think a very good question. I think a lot of stock companies in Bangladesh now start to do to raise fund in the open market. But I think my advice to them is for investors like Ant, we have decent understanding of how this game played in the mobile payment market and the internet. And also we look around Southeast Asia. There's a lot of very good reference the companies in such segment. So my advice is no need really to make a fancy story. Because I know a lot of companies just say, hey, I will just put everything in writing and make a big plan. I can take a 30% market share, 50 next year, and blah, blah, blah. So, but investors like us, we know how difficult these things is and how many challenges they can encounter in the coming few years. And, what the investors looking for is let's talk about the facts. Let's talk about what the real market is. Yes, the demand is there, but there's a growth roadmap we need to recognize. And the company's management need to really put their foot down to the ground to focus on execution and moving things forward, because all those things won't happen easily. The management really need to focus on the execution in the details, as I said, the internal resources, how to handle and assess these dynamics beforehand, and how to deal with the regulator. So all those details, I think the investor can see through the founder and the management's ability and their sense in the market, and give them more confidence to invest into such target companies. So that is my advice, Kamal.
Ash?
Right. I think I agree with Goming, obviously. But what I would do is break it up into 4 categories, honestly. First category, from an advisor standpoint, right? So first, you need to be prepared well. You need to have, I know operations takes precedence over anything which relates to capital raising. But if you're out there, you've decided you're raising capital, you need to prepare well. You need to get your data book in place. You need to get all sort of analysis in place. And once you've decided you're going after, the investors, then I think you need to have that aggressive mindset to reach out to investors and not just get boiled down initially, because a lot of times you reach out to investors, you don't really hear back, or you sort of hear a blanket no. But I think the trick is to be aggressive about it, keep pitching your idea, don't get too disappointed with the initial rejection. The second, I would say, is on the investor selection. You need to have in your mind what does the investor bring onto the table? Obviously, the monetary part we all know, right? The capital you'll get from the investors. But besides capital, what else do you need from these investors? Look at their portfolios elsewhere in the global economy, see whether that can add value to your company, and then decide on which lead investors to go after. I think third is about valuation. I would say a lot of times the founders worry too much about valuation, and they sort of either give out the number too early, don't lowball, don't highball too much, because eventually let that process be of value maximization for you. Let the investors tell you what they perceive your value to be. And I think having an internal reference for valuation benchmarking is perfectly fine. But in my experience, one of the pitfalls that founders do generally is to let out their valuation expectations very early on to the investor, which can create two things. Either you're lowballing yourself, or second, you've actually put out a number which is astronomical and sort of the investor loses any sort of interest. I think fourth is on timing. It generally takes, in my experience, 6 to 9 months to complete a round. So you need to keep that in your head, be ready for the timing implication. You need to, it's not that you start today and within the next 3 months, you're going to be closing a round. So keep that timing implication in mind. Yeah, to my mind, I think, Kamal, these 4 factors are really important if the founders are out there raising a round. But there are many other factors, but at least these 4 are top of the mind.
Oh, you structured it very well. I mean, I think absolutely. And I think this is very helpful. Andy, finally to you.
I'll give a word of encouragement to our audience to say that there's always a great investor for a great company, whether you are in Bangladesh or my home country, Albania, or wherever you are. So if you're a great company, then you should not worry about finding a great investor. They'll find you. So the number one concern for me of the number one focus of founding teams and CEOs should be to build a great company. Whether that's a small great company or a big great company, that doesn't matter to me. Then it will be a small great investor or a big great investor. But what matters is to build a company that establishes itself, that matters in the market, that knows how to be special, that knows how to be special to the market, to its employees, to its shareholders, to its management, to everything. That then will attract attention, will attract investment, because that company will outperform the other companies. Again, irrespective of what the comparison pool is, whether you're building, as I said, a restaurant, or whether you're building a Bcash, or whether you're building another Alibaba, it doesn't matter. In that context, you have to be the greatest company of them all, and the investors will find you. Kamal, you're on mute.
Kamal, you're on mute.
My apology. Having panels like you, I think the audience would love to hear you all talking. But in the interest of time, we will conclude this session here. And really thank you again, Andy, making time, and all 3 of you are in 3 different parts of the world. But I think our audience here got a very good perspective about what the global top investors are looking from Bangladesh and from the businesses here. So with that note, thank you very much, and I wish you all the best, and we'll stay in touch. Thank you.
Sure.
Thank you so much.
Thank you, gentlemen. Thank you.
Thank you, Kamal. Thank you. Thank you, everyone. Good to meet everyone.